Ladies and gentlemen, good day and welcome to Salzer Electronics Limited Q2 and H1 FY2026 earnings conference call. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. I now hand over the conference to Mr. Vineet Agarwal from Aditya Birla Capital.
Thank you, Karthik. Good morning, everyone. On behalf of Aditya Birla Money, I welcome you all to the Q2 and H1 FY26 post-earnings conference call of Salzer Electronics Limited. This conference call may contain forward-looking statements which are based on the beliefs, opinions, and expectations of the company as of the date of this call. These statements are not guarantee of future performance and involve risk and uncertainties that are difficult to predict. I now invite Ms. Savli Mangle for the opening remarks, to be followed by a question and answer session. Over to you, ma'am.
To discuss the unaudited financial performance for the quarter and half year ended September 30th, 2025. I have with me Mr. Rajesh Doraiswamy, Joint Managing Director, Mr. P. Sivakumar, Assistant Vice President Marketing, Mrs. R. Menaka, General Manager Accounts, Mr. K. N. Murugesh, Company Secretary, and Mr. Jitendra Vakaria, Non-Executive Director, KC Industries. Starting with the consolidated financial performance for the quarter, our revenues increased by 22% year-on-year to rupees 419 crores from rupees 344 crores in the previous corresponding period. This growth was mainly driven by higher demand for industrial switchgear and building products division, mainly on account of products like three-phase dry-type transformers, wire harness, relays, and new products like contactors, etc. The EBITDA, excluding other income, was rupees 37 crores in Q2 as against 35 crores, a year-on-year growth of 4%, mainly on account of increased sales, especially in switchgear and building products. The EBITDA margin for the quarter was at 9%, and the profit after tax was rupees 13 crores as against 12 crores. Coming to our half-yearly consolidated financials, the net revenue for the half year was 860 crore as against 701 crore in the corresponding previous period, a year-on-year growth of 23%. Again, higher demand for industrial and switchgear businesses, building products, especially due to high demand products like three-phase dry-type transformers, wire harnesses, relays, and new products like contactors. The EBITDA, excluding other income, stood at 78 crore for the first half as against 69 crore in the corresponding previous period, a year-on-year growth of 14%. The EBITDA margin for the half year was at 9%, while profit after tax was 31 crore as against 26 crore in H1 FY25, a 17% growth year-on-year, with a PAT margin of 4%. Coming to our balance sheet, the net worth of the company stood at 580 crore as on September 30th, 2025, as against 553 crore as on March 31st, 2025. Coming to the breakup of the rest as per businesses, starting with the industrial switchgear business, this contributed 63% of the total revenues in the quarter and 59% in the first half. The business grew 25% year-on-year in Q2 and 28% year-on-year in H1. The margin in this business was 11% in Q2 and 12% in the first half. In wires and cables, this business contributes to about 32% of our revenue in the quarter and 36% in H1. There has been a 15% year-on-year in this business during the quarter and 16% in the first half, while the margin was at 6% in Q2 and 5% in H1. Coming to the building products division, which contributes to 5% balance in the quarter and 5% in first half as well. There has been an increase of 25% in this business during the quarter and 23% in H1. On the export front, for both during the quarter and half year, the export share was nearly 24%, while the exports grew 7% year-on-year in the first half. Having said that, I would now like to hand it over to Rajesh to take us through the business developments and the way ahead. Thank you, and over to you.
Thank you very much, Savli. Good morning, and thank you all for joining us today. A very warm welcome to everyone joining this conference call of Salzer Electronics Limited for the quarter and the half year ended September 30, 2025. I hope I am audible for all of you. And once again, I appreciate all of you taking time to be with us today. Our results update presentation and media release have been shared, and I think Savli also just shared the financial numbers to all of you. And I trust you will have the opportunity to review all of them. And I would like to take you through some key updates and recent developments about the company and also at the industry level. At an industry level, I think India is firmly on an upcycle for electrification and efficiency. The country is adding meaningful clean capacity, accelerating grid upgrades, prioritizing reliability, safety, and uptime. This is translating into specification-driven, sustained program anchored in standards and multi-year capex plans for high-quality switchgears, protection gears, and energy management solutions. In FY25 alone, India added close to 30 to 33 gigawatt of clean capacity. And by July 25, country has crossed a milestone of 50% non-fossil fuel share in the installed capacity. At the same time, on the long term, India is aggressively transitioning into clean energy with the target of installing 500 gigawatt of non-fossil fuel capacity by 2030. All this is creating demand in the downstream for reliable switchgears, panels, cables across utilities and industrial users. On the network, railways, if you see the networks are catching up, more than 99% of Indian railways route kilometers are electrified, creating steady traction, overhead electrification, hardware needs, and deeper maintenance cycles. On distribution side, RDSS scheme has 20.33 crore smart meters sanctioned and 2.4 crore installed as of 15th July 2025, which is translating into scaled demand for metering enclosures, low voltage assemblies, protection gears, and a lot of other related components at the last mile. The cities are buying outcomes, not just hardware. LED with CCMS retrofits are becoming the template for municipal energy savings. Bengaloru's 192 crore BBMP Smart Street Lighting CCMS project that we have taken is a recent proof point and a replicable model for many other urban bodies. In parallel, EV charging is moving from pilots to networks. Public charging points have grown close to 5x since FY22. And India charging market is modeled close to around USD 1.6 billion by 2030. This is a CAGR of close to 27-28% from now. Against this backdrop, renewables, EV additions, near universal rail electrification, scaled smart metering and city-level CCMS rollouts, our core lines in industrial switchgear, wires and cable, energy management, smart meter, and EV chargers are naturally aligned to this growth. With demonstrated execution on urban efficiency programs, example is the Bengaluru project, and diversified participation across utility, rail, and EV ecosystem, Salzer is positioned in a distinctly favorable space for the coming years. Now coming to the company's key updates on recent developments, I think everybody is aware that the company has been granted a patent for its disconnecting and earthing device for a high voltage application, recognizing its innovation in developing a more compact, efficient, and user-friendly design for high voltage disconnection and earthing system. The product is a rotary switch which is designed for traction and locomotive systems and other high voltage networks, offering enhanced safety, reduced size, and easier installation. think this patent reflects Salzer's focus on practical innovation, engineering excellence, and sustained investment in research and development to deliver advanced electrical solutions. We also secured our first large smart meter order in the last quarter, marking our entry into this high potential segment. Although the execution of the initial order was deferred to Q2 due to customers' installation readiness, we used this time to streamline our production and quality processes. As a result, once the project was cleared, we achieved a smart meter sale of close to 22 crore during Q2 of this financial year, taking the first half in this financial year smart meter revenue to 24 crore. This strong ramp-up demonstrates our execution capability, growing customer confidence, and also Salzer's emerging strength in this digital matrix space. As of now, we have a pending order of close to another 22 crores and a LOI for close to this 30 crore, which we expect to convert to orders shortly. You all must have seen various news reports in the previous months about the actual deployment of smart meters being less than 10% of the total allocated smart meters by RDSS. As a result, we revised our revenue estimates for FY26, which has drawn a lot of criticism in the market. We once again want to emphasize that this revised estimate is not a reflection of our execution capabilities. Our technology, our capacity, capability, and the product readiness remains intact and competitive. Our smart meters have been tested and passed for the highest quality levels. In business, we all know the real-world execution often has dependencies beyond our direct control, and this is a classic example. We continue to work very closely with various AMSPs and other stakeholders to support quicker and faster deployments, and we are very confident that the strong underlying demand that the country has for this product will definitely translate into substantial growth over the medium term for Salzer. Our commitment to being a leading and trusted smart meter partner for various AMSPs remains unchanged. I say that further guidance on this business will be given by us as things evolve over the next quarters. Our EV charger business continues to make steady progress. After reworking our strategy during the last year and establishing our operations under our own model in partnership with Ultra Fast Chargers Limited, we have already sold close to 50 chargers in the Indian market. We are now in active discussion with several leading Indian multinationals for potential long-term collaborations. With rising adoption of electric vehicles and strong government focus on charging infrastructure, we see significant growth potential in this segment too. Backed by our own proven engineering capabilities, quality-driven approach, and expanding customer reach, we believe EV chargers will become a meaningful part of Salzer's growth story in the years ahead. Further to the entry into speed sensors 5 years ago, we are pleased to announce now the development of a new temperature sensor tailored for automotive industry, making another milestone in our new product innovation journey. This sensor is currently undergoing validation with 2 leading Tier 2 automotive OEMs, and we are encouraged by the progress so far. We anticipate commencing commercial supplies from Q4 of this financial year, which will open up an additional and promising revenue stream for Salzer, further strengthening our position, not just in automotive solutions, but also in the HVAC, home appliances, and medical equipment space. As far as our subsidiary KC Industries is concerned, KC's top line grew 12% year-on-year in Q2 FY26 to 14.9 crore from 13.3 crore in Q2 FY25 and 11% year-on-year in H1 FY26 to 28.8 crores. EBITDA was at 2.2 crore and PAT was at 1.5 crore in Q2 FY26, and in half year, EBITDA was at 4.3 and PAT at 2.9 crores for KC Industries Limited. Looking ahead, our focus is on sustaining double-digit revenue growth for the full year and improving margins through operating leverage and process efficiencies. We will continue to scale up our smart metering operations, strengthen our product portfolio and enhance our leadership position in the electrical and automation solution space. I'm confident that with our strong foundation, consistent innovation, and focus on quality and customer satisfaction, Salzer is well placed to capture the next wave of growth in India's industrial and infrastructure transformation. I would like to take this opportunity to thank the entire Salzer Electronics team for their unwavering dedication and hard work, and express my deep gratitude to all our stakeholders for their steadfast trust and support in the company's journey. This is all from our side for now. I would like to thank you all once again very much for your time and attention. We can take questions now.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 1 again. Participants are requested to use handsets while asking a question. I'll wait for a moment while the question queue assembles. Yeah, the first question from Aditya Sen from FinDoc.
Hi, thank you for the opportunity. So my first question is regarding the smart meters. In the previous PPT, we saw an order book of 50 CR. So is that the total order book that we have minus the 24 CR that we have executed in H1? And the second question is, has the installation in Tamil Nadu started? Do we have any orders from Tamil Nadu yet?
Okay, the smart meter, we had a 50 crore. Q4, we had an order, out of which we have executed 24, and we still have around 22, 23 as a pending order. Apart from that, we also have an LOI for an additional 30 crore. That's the status. And on Tamil Nadu, I think the tender has been floated. People have quoted. I think the utility is analyzing the technical specs of all the bidders. Hopefully, I think we will have some news on Tamil Nadu tender by November.
How positive is the scenario on those tenders?
We are not participating in the tender. I think I made this clear in the last couple of calls. Salzer has not participated in Tamil Nadu tender. So we only await the results of the tender and see which AMISP wins the tender, and we will be working with that AMISP to secure the order.
All right, understood. All right, sir. I'll call back.
Thank you.
Thank you. The next question comes from Bala Murali Krishna from Oman Investment Advisors.
Good morning, Rajesh. So,
good morning.
Again, on the smart meters, and so LOI of 30 crores is from the same customer or it's from a different AMSP?
From the same customer.
So, and normally to understand that how many AMSPs are available and in India to supply, and how many people, have you approached all AMSPs or any scope for any further order from the new AMSPs other than?
There are close to 10 AMISPs in the country today actively participating in various tenders and bids, and have secured some orders. So we are talking to almost all the 10 AMISPs, and discussions are in various stages. And the tenders that they have taken also are in very initial stages. So the execution is still yet to start and happen. So overall, for your question, I think there are more than 10 active AMISPs in the country today.
So all are ready to work with us, but as there are installation issues on the ground level, so there is no much order inflow. Is it factor?
Yes.
Okay. So secondly, on this temperature sensor, so what kind of orders we can expect in Q4 or next FY27?
I think right now it is still in the initial validation phase, and very difficult to give a forecast for this product. But I would suggest that in the initial phase, the volumes in this product is going to be less. It's not going to be significant. The only thing I can stress here is I think it's a completely new technology product for Salzer, and also for the country here that we are bringing in some kind of a technology that is close to an import substitution. So we see a lot of potential for this product in various other sectors as we scale up and prove the product. So for now, I will not be able to give a forecast for this product until it gets cleared technically, and then we see some kind of a forecast from our OEMs.
And so just follow up on this. So these OEMs are of two-wheeler, three-wheeler, four-wheeler passenger vehicles. So
these are tier 2 suppliers to OEMs. Like there are a lot of OEM manufacturers. We are supplying to the tier 2 people who will be installing it in their HVAC installations and supplying to the OEMs.
Oh, okay, fine, understood. And regarding this new patent, so any market potential availability, how much is the market capacity? Can you share those details?
Salzer is already a very large-scale supplier for rotary switches to the railways, Indian Railways, for many years. So this patent is for a particular product that can disconnect high voltages, like 1,000 volts disconnect switch, where we have innovated and made a switch which reduces the space and the size to a large extent so that it is beneficial to our customer, that's Indian Railways. So as we move forward, I think this will be a kind of a single product that will be in the railways, and it will be a big benefit for the Indian Railways and for Salzer, of course. So this is mainly for the locomotives.
Okay, understood. So lastly, on margin front, there is some increase in copper price also that is not reflecting the results. And again, the prices are on the rising trend.
Yeah, I think the commodity price increase has not really affected in this quarter, but going forward it might have some impact. But there are because of the mix of the product and also the higher other expenses cost, we see a slight squeeze on the EBITDA margins, which we expect to make it better in the coming quarters.
On the overall yearly basis,
sir, can you come back, because there will be a lot of other people in the queue. So if you have questions, you can come back in the queue.
Okay, thank you. Thank you so much, sir.
Thank you. We have the next question from the line of Ishita Lodha from Swan Investment. Please go ahead.
Yeah, hi sir. Thank you for the opportunity. My question is with respect to the high voltage safety device. So here I want to understand what is the competitive landscape, who are the other suppliers, and do we have a cost advantage apart from the technical, the size advantage? So, and what is the value of this device in one locomotive on an average? Yeah.
Oh yes, there is a competition definitely. People, at least there are two, three other manufacturers who also manufacture high voltage disconnecting switch. But the speciality and the innovation that we have done is to, as I just mentioned, to reduce the size and space of the product, which will definitely bring in a lot of cost advantage because of the usage of the materials and things like that. So that will definitely translate into better margins for us, and also we'll become more competitive in the market. And for your other question on the price per locomotive, I think it varies depending on the current rating of the product, anywhere between 20,000 to 50,000 rupees or even more, depending on the current rating per switch.
And currently we have got, so we are looking only to supply to Indian Railways, or we are also looking to export these?
Both.
So we are looking at getting validation from the export market also right now?
Yes. Yeah.
Okay. That's good to know. Thank you.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your telephone keypad. The next question comes from the line of Bimal Panchal from Bimal Panchal and Associates. Please go ahead.
Yeah, good morning, sir. Regarding our EV charging machines, I was just curious to know whether it is applicable to all three-wheelers, four-wheelers, also to the heavy-duty truck and trawlers. It's a universal application, so to some limited.
We make two types of chargers. One is the DC fast charger, which is only applicable for all the four-wheelers, buses, and trucks. The capacity starts from 60 kilowatt until 360 kilowatt. And we also manufacture AC slow chargers, starting from, if I'm not wrong, starting from 3.4 kilowatts or something, going up to 22 kilowatt. This is applicable only for two-wheelers and three-wheelers. So there are two different types of chargers. I think the DC fast chargers cannot be used for three-wheelers.
Yes, that's right. And one more thing. We have sold 50 chargers. So what target sales, like a petrol pump or to whom we have sold like that?
We have sold to various charge point operators. There are multiple charge point operators in the country today. So we have sold these chargers to them. So they will buy these chargers from us, they will install it, and they will run the charge point.
Okay, sir. And during this period, our long-term loan has gone substantially. So what?
Sorry, I didn't get your question.
Long-term borrowing.
Okay. Actually, long-term borrowing has not increased much. I think that has remained almost stable. Our short-term loans have gone up. That's mainly because of our smart meter execution.
Right. Okay. Okay. Thank you very much, sir.
Thank you.
Thank you. We have the next question from the line of Yash Jain from Ambit Capital. Please go ahead.
Thank you for the opportunity. My question is for the wires and cables division. I think we have been maintaining a guidance of 18 to 20% growth for this business, and the industry tailwinds seem to be strong and supportive of that. Just wanted to understand if the industry is seeing more new entrants because of the opportunity available, and given our strong reputation among the OEMs and the industry, are we expecting any new partnerships from any new customers or existing players?
Yes, I think the industry is in the limelight today because of various large-scale players entering the market, and definitely, I think we see a lot of opportunities here. And whatever you said, also, I'm not. I mean, as of now, there is nothing on the table, but definitely there is a lot of opportunities that we can look forward to. Since the industry has a lot of potential, there are a lot of people who are entering here, which is actually good for the industry overall.
Yeah, and we maintain our 18 to 20% guidance for the next 3 years.
Yes.
Okay. Thank you, sir. All the best.
Thank you. We have the next question from the line of Kumar Divyanshu, an individual investor. Please go ahead.
Yeah, hello, my sound is audible?
Yes, sir.
Okay. Thank you for giving me the opportunity, and congratulations for the very good set of numbers. Basically, I have two questions. First is, could you please list down of the business segment in which you are working? And the second one was, second question, I have 2 points. That first is that why Q2 result was bad. Could you please mention the reason behind that and what you look forward for the upcoming coming quarters? And secondly, order book period, total order book from all the segments combined.
Okay, I think I will answer your last question first. I think we don't operate on a large order book position because most of our legacy products like the industrial switchgears, wires and cables, and the building electricals, all these products we do on a month-on-month basis. So our maximum delivery time is 4 to 6 weeks. So we complete all our orders, execute all our orders within 4 to 6 weeks. But we have a forecast from from our customers and OEMs, and based on that, I think we give our forecast for the market. That's how we operate. Secondly, on your question of why Q2 is, bad. I wouldn't say it's bad. Relatively, it is lower. I think sequentially we are lower in terms of revenues by around 6%, and in terms of EBITDA, little bit down, and that's what it is, by 4%, and PAT by around 20%. That the reason is, I think, one, Q1 of this year has been very good, which normally is not, but for us, I think Q1 was good. We had a very good, the highest ever turnover in a quarter in Q1. So that's also one of the reasons that Q2 numbers seems to be a little lower. But otherwise, I think we, on a half-year basis, if you see, 6 months basis, we are still growing 22% on revenues, and EBITDA, we are still growing at around 14%, and PAT, I would say that PAT on a figure, if you look at the PAT on the P&L, it shows there is a reduction of 27%, close to 12 crores. But the main reason for that is the exceptional item in the last financial year. So if we remove the exceptional income in the last financial year, I think we are still up by close to around 16% in PAT also on a half-year basis. So quarter on quarter, there might be little ups and downs, but on a long-term annual basis, we still maintain that we will be able to continue to grow at around 20% compared to last year. I hope I have answered your question.
Okay, and the last question is please mention on the various business segments.
I think it is clearly mentioned in our presentation. If you media release and presentation, if you go through what are the segments that we are operating on, there are 4 segments that we are operating: industrial switchgears, wires and cables, and then we operate on a building electrical business, and also the energy management. These are the 4 broad business segments that we operate. Of course, smart meter and EV chargers are new, so we still combine that into industrial switchgear. But as years go by, I think we will slowly separate them and see how it grows.
Actually, I didn't get the second last and last one business segment. It's what you have mentioned. Could you please repeat that?
Building electrical and energy management.
You're building electrical and energy management.
Energy management. Those are the energy savers business that we do along with the corporations.
Okay. Thank you so much. Thank you.
Thank you, sir.
Thank you. We have the next question from the line of Gyasuddin Siddiqui, an individual investor. Please go ahead.
Hello, sir.
Hello, sir.
Yes. So, can you please repeat, how much the guidance for this year? Because you have mentioned in your presentation, you have said that we will be growing in double digits. So, is there any change in the guidance?
No, there's no change in the overall annual revenue guidance.
So, it will be around 18 to 22%.
Yes, correct.
And can you please tell me the market for the newly patent earth moving market, and what will be the revenue projection for not this year but for the next year, FY27? If we can estimate that.
Yeah. So I just want to say that not every patent really translates into a large revenue immediately. Because this patent that we have done, I think the product we are already selling into different markets, and we are already generating revenues from Indian Railways and other locomotive manufacturers. What we have done now is a new technology, new innovation on the same product that gives an edge for Salzer over the competitors. in terms of cost, in terms of technology, and also from the customer point of view, we stand much ahead than our competition because of what we are proving to them. So that there are a lot of indirect benefits that the company gains because of this. So on the revenue guidance, there's no specific revenue guidance that I'll be able to give for this product or patent.
Oh, sure. Thank you, sir. Thank you so much from my end.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1 on your touch-tone telephone. The next question from Ankit Kapoor, an individual investor. Please go ahead.
Thank you. Thank you for the opportunity, sir. Sir, my question is very simple and it's related to the cost control measures company is currently adopting. Because what I see in the financial cost control measures, right? So if I see the PAT margin, it's continuously deteriorating from each and every year, right? Currently in H1 FY26, it's 3.56. Last year it was 3.75. So it's continuously in downtrend. And if I see the gap between EBITDA margin and PAT margin, it's over 5%, right? So what I think is that you are currently focusing on only increasing turnover, but there are no cost control measures you are adopting. So it's continuously deteriorating the interest of the minority shareholders because ultimately it's the PAT which will give the return to the shareholders, right? So that's my concern only. Right. So
I fully agree with you. I think I fully agree with you. I think the focus is not just on revenues. I think the focus is definitely on the profitable growth. I think that has been the focus. And if you see over the years, I think we have been sustaining these margins for several years. And on a quarter-on-quarter basis, definitely there will be variations because of various product mix. Certain products grow at a faster rate and certain products grow at a slower rate. And that's why you see there's a small blip on the margin percentage. If you look at the PAT, I think this year's PAT is little I would say, it doesn't reflect the true picture. Because if you see last year, 6 months, there was an exceptional income of close to 16 crores, which has actually got the PAT up in the last half year, which is not there this year. So for equivalent comparison, I am taking profit before tax and before exceptional items and see what happens there. I think last half year, our PBT before exceptional was at 5.1%, and this year it is at a 4.9%. So there is a 0.2% difference between last year and this year. So this, in my opinion, I think this quarter-on-quarter, year-on-year, half-year ending, I think this happens because of the product mix sales and various other things that happens in the market. But on a long term, I think our focus is definitely to grow the bottom line percentage as a percentage and absolute number and definitely give value to the shareholders, as you said.
And then
at the same time, I would say that, the top line has to grow substantially for the company to sustain and make better margins. So that's also the focus for us, which will in turn
that I understand. Yes.
Yeah.
Right. Okay. Thank you.
Thank you, sir.
Thank you. Next question comes from the line of Bhavik Shah from Invexa Capital. Please go ahead.
Yes, sir. Am I audible?
Hello?
Yeah, am I audible?
Yeah, go ahead, sir. You're audible.
Yeah. So my first question is, sir, what is the current capacity and capacity utilization, and what are our capex plans for the FY26 and FY27, and where are we adding capacity in which segment?
I think this current year capex, we won't be doing any major capex as we have done some major capex in the last year and year before that. So this year, I expect that total capex can be anywhere around 20 crores or below. That's what we are expecting to do. On the capacity utilization, I think I've been saying this in several calls. Our capacities are very dynamic, particularly in the industrial switchgear business. I think we have grown close to around 27-28% in this quarter and half year. This capacities we keep increasing as we get the demand, because the capex for this products and business is not very heavy. However, in wire and cable, currently we are at around 60% capacity utilization. And when that reaches close to 80-90%, then we have to do a capex to increase the capacity for the wire and cable. On the meters, sorry, these are maintenance capex and balancing capex.
Okay. Yes, and you were saying on meters? Yeah.
On the meters, we are still just starting up, so we still have the full capacity to be utilized. That's what I want to mention.
Understood. And so basically, what is then our current, for example, in the industrial segment, we say we don't see capacity utilization as a number. And what is, how do we gauge the revenue? What can we generate from this facility?
There are 3 facilities that operate on the industrial switchgear front. So I think we are this year we expect that the industrial switchgear business will continue to grow at around 25% and above. And the current capacity utilization levels support this kind of a growth for this year.
Okay. And sir, you already mentioned we only have around 4 to 6 weeks of, say, order book. Then what is the reason we hold such high inventories? Our inventory levels are almost say upwards of 110 days or so.
Correct.
So why is that?
We have inventories of raw materials and finished goods based on the forecast and projection that our customers give. We have more than I would say more than 1,500 SKUs from 15 different product lines. So we need to maintain stocks and raw materials for all these products across the line.
Okay, so just one question. Can you just give a broad EBITDA or EBIT margins for the segments, say in the industrial, how much we make in the wires and cables, and in the building segment, what is the broad EBIT margins or EBITDA margins?
These are, I think they are mentioned in the presentation and media release, but you can take a look. For now, I can say that industrial switchgear businesses, we are at around 12% for 12 to 13% in H1, and the copper business we are at around 6.5%.
Okay, so the copper business is the wires and cables, right?
Yes, wires and cables.
Understood. Thank you so much, and all the best.
Thank you.
Thank you. The next question comes from the line of Harsh Saraswat from Elegant Family Office. Please go ahead.
Hi. So I wanted to ask on the revenue guidance. Last quarter we gave guidance of 1,600 crores from existing business for the year FY26 and 400 crores from smart meters. So are we maintaining this guidance or are we changing the guidance? What is it? And what will be the EBITDA margin?
We continue to give, I think as of now, we continue to maintain that guidance, and we will see how things go in Q3, and if any change required upward or downward, we will do that end of Q3. But as of now, I think whatever we projected remains.
On the smart meters also, we are guiding 400 crores of revenue in FY26?
Hopefully, yes.
Okay, and overall EBITDA margins, which we had a target of 10-11%, is it maintained?
Yes, we expect that if we achieve the top line, I think we will achieve 10% EBITDA margin.
Okay. Thank you so much and all the best.
Thank you, sir.
Thank you. Next question comes from the line of Bhagwat N. from Prosperity Wealth Management. Please go ahead.
Thank you for the opportunity. Could you please comment on the competitiveness of Salzer in US market, considering the current tariff scenario, and your outlook for overall export business opportunity going ahead?
Good. I think the very important point that we have to consider in the current situation. Our direct U.S. business in the 6 months is close to around 7%. That's what we export from our total revenues. That's the direct export. Apart from that, we also have an indirect export of close to 3%, which we sell into various customers in India, and they take it up with their products to U.S. So all this 10% business is currently affected because of the tariffs. Affected, is actually undergoing this tariff of 50%. But until September, I think we have not seen a major slowdown in the business because this got implemented by end of September. But we see some slowdown in October, particularly for the North American business. On the competitiveness, of course, we are highly competitive compared to many other countries and suppliers, and we expect that the overall situation to get settled down by end of November. I think that's what the news flow is as of now. So if that happens, then there is no issue. But if that doesn't happen, I expect out of this 10%, we will see definitely a sharp decline of close to around 30-40% in the U.S. business.
Okay. And apart from the U.S. business, the other countries, what is your outlook going ahead?
I think Europe is definitely slow. Europe, half year we have grown at 9%, but on the quarter-wise, if you see, we are down by 2%. Asia also is a little slow, but the full year basis, I think the exports will continue to grow at around 7 to 10%.
Okay. On a medium-term basis,
our export share on the revenue last financial year was close to 28%. However, this half year it is at around 24%. Though in absolute numbers we have still grown, but the percentage to revenue has dropped. That's because the local businesses have grown much faster. So that's the reason. Whereas the export business is not growing at the same speed. So I think this year the export businesses might grow only at around 10%.
Okay, sir. And your outlook for medium term, let's say 2 to 3 years down the line?
Our focus is always to grow the export business and continue to maintain our export revenues at 30%, 27 to 30% of our overall revenues. That's what we aim to do, and we reached that level last financial year. But unfortunately, I think this year the exports also is down. At the same time, the Indian business also is growing at a faster pace. So there are two things that's working on this against this. But on the medium term, our goal is to maintain 27 to 30% of our revenues from exports.
Okay. Thank you and all the best.
Thank you. The next question comes from the line of Kishore, an individual investor. Please go ahead.
Hello, sir. Good morning. I have a question regarding the EBITDA margin guidance for the existing business. Can you please give us the EBITDA margin guidance for FY26 only for the existing business, apart from smart meters?
9.5% to 10% is what we foresee for this full financial year.
Despite the higher commodity prices?
Yes.
And sir, regarding the smart meter execution, like we have seen the news regarding the public opposition and other issues in the execution. So are things improving on the ground in the current month, and what are we expecting on ground for the upcoming months? Like, can we expect some improvement?
Definitely, I think the implementation of smart meter business will definitely progress and improve as we go forward. It's not just the public opposition, but that's only in a very few states and very few locations. But there are other infrastructure challenges that the AMASPC have in implementing this project. But things are getting cleared, and definitely on the medium to long term, this business will definitely scale up.
Sir, one more question. I know that you are early in this business, the smart meter business, but Sir, there is a concern regarding this industry that once the smart meters are installed in like a few years, then what can be the new opportunities in the long term in this business? Like, can this sustain the growth that we are seeing in this industry? And what new avenues can open in this?
No, while we entered this business itself, it was clear that this business is going to be there for the next 8 to 10 years. I think that's when this boom we are seeing today will sustain. What we expect is that there is a 25 crore smart meter demand that the government has estimated and given tenders for. That's the phase one. But as we complete this 25 crores, it was expected to get completed in 2 years, but then now 2 years are completed. The government has extended it for another 2 years. I think that it will take another 5 years to complete this 25 crore smart meter installation in the field. By the time that we complete this 25 crore smart meter, I expect the demand, the new demand, will be for another 15 crore meters in the country. Because the country is progressing and growing, the demand for the smart meters also will continue to grow. So this will definitely come, the growth and the potential will come down, but it will continue at that pace for the next 5 years. So we see at least a 10-year cycle for this business.
And sir, as the new competition enters our existing business, can we expect some pressure on our margins or other things? Can it impact us negatively in a significant manner in the medium term?
I didn't get your question, sir. Can you repeat?
Sir, we are seeing news of some new competition, some big players entering our business. So can we expect any negative impact, significant negative impact on our margins and the business in the medium term?
You are specifically talking about the wire and cable sector?
Yes.
Okay. No, I don't think we will see any impact because of the new entrants that are coming in, because they are much larger players than us in this sector. I think the top 2 or 3 players will be impacted much because we are still much smaller in the segment. So, but as another investor shareholder has asked whether we see an opportunity here because the large players are entering. So we look at it as an opportunity for Salzer because the large players are entering and the market is becoming better. So I don't see any threat for our current revenues and margins.
Okay, sir. Thank you so much. Best of luck.
Thank you. The next question comes from the line of Avinash Nahata from Parami Financial Services. Please go ahead.
Hi, am I audible?
Yes, sir. Go ahead, sir. Good afternoon.
Yeah. So, good afternoon. So, the first question is about rotary switches, EV chargers, etc. Do we sell only under our own banner, Salzer, or it also gets white labeled? We are manufacturing similar products for other people also.
I think we have a mix of both. On the industrial switchgear business, I think it is mostly under our own label. On the wire and cable, I would say it's a 50-50 revenue share between white labeling and our own brand.
Okay. And this smart meter progression, if you can spend just half a minute more, you said that initial phase 125 crores and another 15 crores of smart meter. So, 2 things. First is, can you define the value opportunity for the smart meter of 25 crores phase 1? And where would the incremental demand of 15 crores come from?
Historically, the smart meters, historically the electricity meters have been growing at around 20% in the past several years. As the country grows and progresses, I expect that this demand can actually increase from 20 to 25% going forward. So that's why I say that, by the time that we complete in the next 5 years, it's already 2 years is gone, so 7 years we have to consider. So I'll say 15 crores over a period of 7 years is a 2 crore electricity meter demand every year for 7 years. So which is very, very nominal in in my opinion, and based on the historical data. That is one. Secondly, on the value, I think the smart meters price is anywhere between 2,500 to 3,500, depending on the single phase and three phase meter. So on an average, you can consider the price is around 2,500 per meter. So you can calculate what is the total value for a 25 crore meter.
Yeah, I mean just thanks for that. And just kind of reconciling these numbers, we have like 26, 27 crore households in the country. So I mean, what is the? So if I were to ask you, how many smart meters have been installed on a stock basis in the country, and on a flow basis, every year, how much they are getting installed?
I think in my call, I just mentioned how many meters have been installed until this July. I can just take it out if you want. I mean, it's approximately around 2.4 crore meters, I think, if I'm not wrong, has been installed so far.
Yeah, you briefly
Smart
mentioned
meters.
10%. Yeah.
Yeah, no, I mentioned the figure in my earlier speech. Okay. It was around 2.4 crores until this July 2025 that has been installed. The total tenders that have been given is approximately around 20 crore meters. So another 5 crore meters is yet to be tendered in the phase one.
And are there any impediments for the faster conversion of LOIs?
If we have an LOI, I think we try very hard to convert it to our order as soon as possible. You're asking about our LOI, right?
No, not yours specifically. At an industry level, I'm saying if the market wants to grow faster, what are the impediments from the...
I think that's a question that you have to direct to the AMISPs. Because for us, whatever information that we have is only a second-hand or third-hand information from our customers. So we see that there are a lot of infrastructure bottlenecks, including the networking, the communication, installation. There are a lot of logistical issues, monsoon. So there are multiple issues that all accumulate and then slow down the implementation of the overall project. And also it's a new business for all the AMISPs also. So they're also taking time to understand how this works. Because you are imagining 40 lakh, 50 lakh meters in from one location to communicate to a network every 15 minutes or every 30 minutes. We don't have an infrastructure to support that as of now. I think that's getting created. That's getting created and that's being set up. You need to have a software that's capable of receiving this data and processing. The meters have to have the network connection to communicate and send the data. So there are multiple things that's involved in this project.
And one final thing is, you are supplying these to the project guys. You do not supply to the ultimate utilities, right?
Yeah, they supply to ultimate utilities.
Yeah, so our billing happens to the project guys, people who are doing the whatever area location projects.
Yeah, correct.
Thanks a lot.
Our billing is to the private companies.
Right.
Thank you.
Thank you, sir.
Thank you, sir.
Next question comes from the line of Gaurav Agarwal, an individual investor. Please go ahead.
Good morning, sir. Just to be clear, you are expecting approximate revenue of 1,100 crores in the second half of this year and approximately EBITDA margins of 11% to fulfill the guidance of 1,000 crores this year with EBITDA margins of 10%.
Yeah, we are looking at our legacy business close to around 1,600 crores is what we are expecting to achieve in this year, out of which we have done around 840. No? Correct, you're right. And then we expect close to another 300, 350 crores in the smart meters.
Okay, and sir, can I also know what total addressable market is in the high voltage patent which we have received recently?
It's a very specific market that we are looking at on the locomotives. Since then we have developed a patent and we have come out with a new innovation, now we have to see if this has a new application in any other area. But as of now, our focus is on the locomotives.
And also, you are expecting 11% EBITDA margins in second half?
Yes. I think on an average, second half, we should achieve close to around 10%. Q3 and Q4 should be better.
Thank you. The next is a follow-up question from Ishita Lodha from Swan Investment. Please go ahead.
Hi, sir. Thank you for the follow-up opportunity. So just on the previous question, you had mentioned that in the value of the switch, the disconnecting switch is about 20,000 to 50,000 on an average. So, but do we need just one switch in one locomotive, or will we be needing multiple such switches?
I think either one or two.
Okay. So, last year we saw addition of 1,400 locomotives, and this year about, let's say, if we see some growth, so maybe 1,600 locomotives. So the market potential in India for this seems to be very less. Is my assessment right, or am I missing out on something?
No, you're right. I think Indian Railways the total business might be anywhere between 15 crores to 20 crores for this switch.
Okay. So how are we looking at scalability of this product?
We have other locomotive manufacturers. We are looking at companies like GE or Alstom, and maybe some export potential that we can see for this product.
Okay. And here you had mentioned that we have a cost advantage. So, is it possible to quantify how significant, just to get a sense of how significant the cost advantage is?
It is significant, but as we go to the market and then start quoting in the tenders, then we will know how beneficial it is to the company. So that we have to wait to watch. But on the cost basis, definitely there's a significant difference between our existing product and the new product.
Thank you. We have the next question from Chinmay Nema from Persian Capital. Please go ahead.
Good morning, sir. I had two questions. Firstly, if you could, if possible, if you could share the order book on the smart meter business, the current right now. And secondly, if you could give some color on the working capital requirements of the different segments of your business.
I think smart meter order pending, order book, I think I just mentioned during my call, we have an order pending of around 22 crores, which is the pending order that we received earlier. And apart from that, we also have an LOI for close to around 30 crores. So this is the current situation on the smart meters. On the working capital segment-wise, I don't have the numbers ready, but I can share it with you once the call is over. We can pull that numbers and share that with you.
Sure, sir.
Thank you.
Thank you. As there are no further questions from the participants, I now hand over the conference to Mr. Rajesh Doraiswamy, Joint Managing Director, Salzer Electronics Limited, for closing comments.
I once again thank everyone for your extreme interest and trust in the company. I look forward to continuing to interact with you over the quarter and by the next call in the coming quarter. Thank you very much. Bye-bye. Have a good day.
Thank you, sir. On behalf of Aditya Birla Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
If you found this video helpful, Please like, share and subscribe to Concall India for latest upcoming Concall.